Hello guys, good day. Welcome to our first video lecture in ACC 111, Financial Accounting and Reporting. In this particular video, we will be discussing about the introduction to accounting. By the way, I am your lecturer, Sir Joe Marie N. Flores. By the way, this topic, Introduction to Accounting, is being divided into two videos. The first part includes the discussion of the definition and the concept of accounting up to the discussion of the different basic principles in accounting. So other topics that is being included in ULU A in your self-instructional manual will be discussed in the second part of this topic. To start with, let's discuss the concept of accounting. Accounting is a system that measures business activities, processes that information into reports, and communicates the results to decision makers. So this accounting encompasses different aspects. First, accounting is a system. So when we talk about system, that means accounting is not a product of a single activity, which means accounting is actually a product of series of activities before accounting information can be derived. Another is measurement. Accounting measures business activities. So all business transactions that affects assets, liabilities, and owner's equity is actually being recorded and being measured in accounting. From that information that we have been recorded, such data will be processed into a more relevant information. And that again leads to the third aspect of accounting, which is processing, or accounting processes data into a more meaningful information that can be communicated to the different decision makers. Take note, guys, that the endpoint of accounting is financial information or financial statements. Financial statements is very relevant because it is a tool to be used by the different decision makers in creating a decision. Without this, they will not have any solid and strategic basis in creating their decisions. So that is the concept of accounting. The second one is that accounting is being referred to as the language of business. Why language of business? Accounting is being referred to as the language of business because accounting actually is being used as a medium to communicate the status of the business to the different stakeholders. Examples of stakeholders includes owner, investors, workers, and the government. So it is the work of the accountants, it is the work of the accounting to report to the different stakeholders what happened or the status of the business. Because of accounting, a business could function optimally. Because of accounting, a business would know where it stands financially. It would know whether it's making a profit or not, and would know its financial situation. So first, through the use of accounting, a business could make out the best from its resources because they already know the status of the resources they have because of their records. Second, because of accounting, a business would know where it stands financially because of constant recording, because of real-time update of the finances. The entity might actually know whether the liabilities is already exceeding with its total assets. And accounting is also a great help in knowing whether it's making a profit because in accounting, we account how much is the total revenues and compare it with the total expenses, therefore making an information whether an entity is doing good by earning a profit or actually earning a loss. And lastly, it would know its financial situation. So these are the very good contribution. These are the bright contributions of accounting in a business. So therefore, it's easy to say that without accounting, business would, however, accounting would usually struggle to survive. So with the help of accounting, a business could probably have its way to success. So at this moment, we will be discussing the evolution of accounting. So evolution of accounting, we will be talking here the accounting then and now. So the evolution is actually being divided into four eras. So the first era is the primitive accounting. In this era, they keep records through the use of clay tokens, keeping accounts as are traced far back as 8500 BC. They use clay tokens found in Mesopotamia to keep their records. So this is how they illustrate their records. So it's actually given that even before, even in our ancient eras, accounting has already is already established. So therefore, that answers the urgency of why we need to have accounting in our current situation. Currently, we all have the means to record. Karon, we have the technology to help us in recording all the transaction. So why not record? Why not use accounting? Before gani, ang ilalang gigamit is ang mga clay. So why not karon nga daghan na taog means to be used in creating records or maintaining books of accounts for a particular business. So from clay tokens, it has evolved into clay tablets. So from tokens, it has evolved to clay tablets. So these are the symbols impressed on wet clay tablets to record all their transactions. So in primitive era, they use mainly tokens or clay, whether it's clay token or clay tablets in recording their business transactions. So these are the examples or illustrations of clay tablets. So these marks has their corresponding meaning. So we do not know what does it mean, but what is sure, these marks could constitute recording from their business transactions way back in the primitive era. In primitive accounting, First Dynasty of Babylonia, its law based on Code of Hammurabi requires merchants trading goods to give buyers a sealed memorandum containing the agreed price before it can be considered enforceable. So the scribe recorded the agreed upon transaction on a small mound of clay with the parties affixing their signatures. So scribe is our counterpart for public or legal documents right now. So before, their contracts are being realized into a scribe. So clay tablets also recorded payments of wages. So all transactions are again properly recorded even in the primitive era. So here are example of scribe illustrations wherein all transactions are properly recorded. After primitive era, let's move to the Middle Ages or the Middle Era. So from the use of tokens in recording business transactions, let's now move to quipo. So from clay, let's move to knotted cords. It has evolved into knotted cords. From the use of clay to the use of knotted cords of different lengths in recording. So quipo is being used with different length and colors to keep accounting records by Inca Empire. So these knots with the corresponding cords and colors constitute um, records as well of their business transactions. So in this era as well, the development of more formal accounting keeping methods is attributed to the merchants and bankers of Florence, Venice, and Genoa during the 13th and 15th centuries. Double entry bookkeeping is not a discovery of science, but rather it is the outcome of continued efforts to meet the changing necessities of trade. The accounting that we have right now is not actually due to a science, but rather it's due to the continued efforts of our ancient people in order to meet the changing necessities of trade. Because in trade or in business, accounting is really important. Keeping records is really important because you will not know what is already the status of the business if you don't keep your records. So the method of Venice in this era, Luca Pacioli existed, a Franciscan friar and a celebrated mathematician. So he is actually considered as the father of double entry accounting. So he published his book Summa di Arithmetica, Geometria Proportioni et Proportionalita, or everything about arithmetic, geometry, proportions, and proportionality. So Fra Luca Pacioli or Luca Pacioli is considered as the father of double entry accounting. And even right now, double entry system is still being used in practice. We also have Eugen Schmalenbach, a German academic economist, which has a research on the problem of failure to compare meaningfully the financial data made available by different companies and published his book, The Model Chart of Accounts. So this particular scientist, Eugene, is actually the one who introduced the chart of accounts. So when we talk about chart of accounts is the list of accounts that is being used to record business transaction. So in our succeeding discussions soon, we will be discussing and I will be introducing to you the different account titles that we could use in recording business transactions. So from primitive era to middle era, now let's move with information era, or it's safe to say that it is on the 21st century already, where Dan Bricklin and Bob Frankston wrote VisiCalc for the Apple II, the first electronic spreadsheet, the most important business application for the personal computer. So from clay to quipo, which are knotted cords, to the use of computer in recording. So we could really see the evolution of accounting from the things they used in recording. So from clay to cord down to computer. So there's an adage which says that information is it, you either breathe it or perish. So in this era as well, ASEAN 2015 is being introduced. So in 2015, ASEAN integration has been introduced, wherein CPAs from the member countries of ASEAN or Association of Southeast Asian Nations can now practice accountancy from their respective countries. So for example, if you're a Filipino CPA, you can now practice your accountancy profession except for taxation in other countries as long as such country is member of the ASEAN. Okay, at this moment, let's proceed with the role of ethics in business. So as we all know, ethics is concerned with right and wrong and how conduct be judged to be good or bad. So in business, and specifically in accounting, we might be facing some dilemmas wherein we really need to create decision. So such decision that we will be making should be based on ethics, or should based on our professional ethics. So ethics comes in many ways. So we have business ethics. Business ethics means tell telling you what is right or wrong in a business situation. Professional ethics as well tells what is right or wrong regarding a profession, where ethical conflicts can arise when what might be best for the company is wrong morally or professional. So meaning ethical conflicts, that means something which is not good based on our professional ethics but is being pushed by the business. So in that case, we should always consider our professional ethics. So we also have ethical dilemma. It's a business. Business is a good source of ethical dilemmas because its primary purpose is to make profit. So again, the purpose of making business is to create profit. So profit is money. And when we talk about money, money is very hot. So there are some people who will do everything just to make money. So, as a certified public accountant, as a business practitioner, we should consider ethics in doing such. So, we should make sure that we create profit in the most legitimate ways. Another, let's discuss the forms of business organization. So, we have three major business organization. So the first one is sole proprietorship. So when we talk about sole proprietorship, this business organization has a single owner called the proprietor, who generally is the manager. So when we talk about sole proprietorship, the manager and the owner are of the same individual. So basic example of sole proprietorship are sari-sari store or small businesses where the owner also acts as the manager of the business. On the other hand, we also have partnership. So when we talk about partnership, it's a business owned and operated by two or more persons who bind themselves to contribute money, property, or industry to a common fund with the intention of dividing profits among themselves. So when we talk about partnership, you will now have two or more partners. So others says that it's better, two heads are actually better than one. So if you would like to partner some individual, or if you would like to partner your friends in venturing business, you may actually do so. So you just need to create and contribute money, property, or industry to a common fund. The third one is corporation. Corporation is a business owned by stockholders. It is an artificial being created by operation of law, having the right of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. So example of corporations are big businesses like San Miguel Corporation, Cebu Pacific, ABS-CBN, and so on and so forth. So, purpose of business organizations, we also have three purpose. So, first we have service industry. So, service industry are companies performing services for fee, meaning no tangible product is being purchased or is being paid, but rather what is being paid is the service they have rendered. So example of services are services from different professionals like CPAs, lawyers, doctors, and a lot more. The second one is merchandising. So merchandising, these are companies purchases goods that are ready for sale and then sell these to customers. So when we talk about merchandising, or others term it as buy and sell, these are the business enterprises where they buy the products and eventually sell the products they have bought from their suppliers. So meaning there is no conversion of product in this type of business organization. Unlike with manufacturing, because in manufacturing, companies buy raw materials and then convert them into products and sell the products to other companies or to final consumers. So example of manufacturing is manufacturers of furnitures. So for example, they buy raw materials. What are the raw materials of furniture? So the raw materials of furniture are, let's say, wood. So they buy wood and then they will convert, process that wood to become furniture, and then such furniture will now then be sold to the final consumers. So again, unlike merchandising, no conversion, no process is being made. Whatever product nga ilahang gikumpra sa ilahang mga suppliers will be the actual product that they will be selling to the final customers. To continue, we also have micro, small, and medium enterprises, or SME, or small, medium. enterprises, micro, small, and medium enterprises. So when we talk about micro enterprises, these are also types of organization which assets before financing of 3 million or less and employ not more than 9 workers. So if the assets of a business is only 3 million or less and its employees are not more than 9, then therefore it belongs to the category of micro enterprises. So usually it includes mini grocery stores, sari-sari stores, if any, and the likes. Another is small enterprises. When we talk about small enterprises as well, these are entities which has an assets or entities with assets before financing of above 3 million to 15 million and employs 10 to 99 workers. However, if your assets includes 15 million to 100 million and your employees ranging from 100 to 199 workers, then therefore such business enterprise is already considered as medium enterprises. So again, we have micro enterprises, small enterprises, and medium enterprises. On May 23, 2008, RA number 9501 was signed into law by President Arroyo. This law seeks to address problems facing MSMEs, particularly the lack of capital and access of credit. Under the law, banks and lending institutions are now required to allocate at least 10% of their loan portfolio to MSMEs, broken down as follows: 8% to micro and small enterprises, and 2% to medium enterprises. The old law provided only for a total of 8%. So from 8% to 10%. Thanks to the President, Gloria Macapagal Arroyo, it actually creates opportunities to our micro, small, and medium enterprises to venture more business because they will now have source of finances to be used in the business. So what are the activities in the business organization? So there are three activities in the business organization. The three includes financing activities. So when we talk about financing activities, these are organizations requiring financial resources to obtain other resources used to produce goods and services. So when we talk about financing, we have two types of financing. So we have internal financing and external financing. But in order for us to understand simply the term financing is sourcing out of capital. So if the entity has not enough capital to be used in the operations of the business, then they can actually source out. Example, they could borrow money from the different banking institutions or financial institutions. So primary sources of financing for most businesses are owners and creditors. So the two types of finances includes um, internal and external finances. So if the source of financing is the owner, then that is termed as internal financing. But if that source is external, then meaning creditors. So if the source of your finances are your creditors, then that means external financing. The second one is investing activities. So investing activities, managers use capital from financing activities to acquire other resources used in the transformation process. So in investing activities, whatever money they have derived in financing activities, they will now be using it in investing activities. They will be investing it to acquire more non-cash assets or long-term assets to be used in the operation. For example, in the transformation process. So, kung unsa man ang ilang na source out nga funds diri sa financing activities, gamiton nila diri sa invest. For example, to buy manufacturing na mga materials or mga technologies, magbalit sila ng mga machineries para easier and efficient ang ilahang production. And lastly, we have operating activities. Operating activities involves the use of resources to design, produce, distribute, and market goods and services. So usually, operating activities include the day-to-day operation of the business. Example, the selling of products and buying of raw materials. So those are the three activities in the business organization. Okay, so let's go back with um, the definition of accounting. So earlier we have already discussed the concept of accounting, but this time let us face the different picture of accounting. The first one is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decision. So again, in this definition, there are three qualities. First, accounting is a service activity. So accounting is under service industry. So that means we provide services for a fee. And then its function is to provide quantitative information. Guys, we have two types of information, quantitative and qualitative in nature. However, what is being focused by accounting is only in a form of quantitative information. What is quantitative? Quantitative meaning in a form of numbers. These information are primarily financial in nature that is intended in economic activity to be used in making economic decision. Another definition of accounting is that it is the process of identifying, measuring, and communicating economic information to permit judgment and decisions by users of the information. So earlier, the concept earlier of accounting says about the communication of financial information. So again, it still boils down to the concept of accounting, wherein accounting produces financial information which is relevant to be communicated. Because if this information will not go to the different decision makers or users of the information, then therefore these people cannot create strategic and best decisions without financial information. And lastly, it is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof. Now, it may have accounting may have different definition. However, its soul is just the same. It may have different meaning, it may have different words, but its meaning will just be the same. Okay, let's continue. Let's discuss this time phases of accounting. Before the effects of transactions can be recorded, they must be measured. Again, before all transactions can be recorded, they must be measured because um, not all business transactions can be recorded. Only those business transactions that affects our assets, liabilities, and equity can be measured. So later on, we will be having a um, more specific discussion about what is or what are the activities that requires journal entry or that affects assets, liabilities, or owner's equity. Another, to be useful in making decisions, the recorded data must be classified and summarized. First, it must be measured, and then it must be classified and then summarized. Classified meaning, after you have recorded it, you will be grouping it depending on their classification. So, for example, all assets will be recorded in this separate group, all liabilities will be recorded in this separate group, and all equity accounts will be recorded in a separate group. And then after classifying them, you will be summarizing them because what we will be reporting to the different users is the summarized information already, which is more relevant than the daily basis or the individual records of accounts. After going through the preceding phases, it is imperative that the results of the summarization phase be interpreted and analyzed to evaluate the liquidity, profitability, and solvency of the business organization. So after being summarized, we will now interpret whether the entity is doing good or not, or if the entity requires more venture, or if the entity requires more management focus in order to earn more profit. So that's how are we going to move in accounting. So as what I've said earlier, in the concept of accounting, na accounting is a system. So that means it is not just a single activity. You need to measure, classify, summarize, interpret, and analyze in order for us to derive relevant financial information. So let's have Pacioli's double entry bookkeeping. So earlier, we have introduced to you Fraloka Pacioli, who is the father of double entry bookkeeping. So double entry accounting system states that for every debit or debit there should give there exists a debit haber, should have or should receive, or in every debit there is a constitute credit. So in every debit, there constitutes credit. So Pacioli introduced the three books kept by business. So there are three books in business. So first, we have memorandum, the book where all transactions are recorded. The second one is the journal. It's a merchant's private book. And the third one is ledger. It's an alphabetical listing of all businesses' account along with the running balance of each account. So financial accounting, which is concerned with the supply of information to the owners of entity. So we have different branches of accounting, but in this subject, we are assuming ourselves that we are financial accountants, meaning we are preparers of financial information this time. So management accounting as well, which is concerned with the supply of information to the managers of the entity. So management accounting and financial accounting are two different branches. Financial accounting prepares financial information, while management accounting provides information to the management only. Unsa ang gina-provide ni financial accounting? It provides financial information to the external parties or to the external stakeholders. Pero ang gina-provide din og information ni management accounting is only the managers, meaning it only provides information internally. Okay? So let's proceed with fundamental concepts. So when we talk about fundamental concepts, these are the practice, the norms that the concepts that we follow in accounting. So first we have entity concept. So entity concept meaning an entity is an organization or a section of an organization that stands apart from other organizations and individuals as a separate economic unit. So which means if you are an owner, as an owner, you are separate from the business. So the business, the business's affair is separate from the affair of the owner. So that means all of the transactions of the business should be kept separate sa imuhang records as a personal owner. So dili dapat pasabot nga kung ikaw ang tag-iya sa sari-sari store, dili pasabot nga puwede ra nimo gastuhon ang mga halin sa tindahan kay ikaw man ang tag-iya. So dili dapat ingana ang concept. Unsa ang dapat nga concept? Dapat kung unsa ang affairs, unsa ang assets and liabilities ni owner, dapat lahi kaysa sa assets and liabilities ni business. So that is entity concept. Number two, going concern concept. That means business has indefinite life. So we should consider in creating business or venturing business that our business has an indefinite life. So dili pwede nga nag-create ta og business nga nag-expect lang ta nga after 1 year mag-close na ang business. So dapat we always think that the business will last forever. will last forever. Sana all mag-last forever. The third one, kidding aside, is periodicity or time period concept. So this means an entity's life can be meaningfully subdivided into equal time period for reporting purposes. So this is very important. That is why we have accounting. Dili pwede nga for the 5 years, kaisa lang nimo mag-account. Ang purpose nga nung naatay periodicity and time period concept is for us to know the status of the business every end of the period. For example, every year mag-prepare ta og FS for us to know what happened in the business for the first year. So in that case, we can now assess what are the necessary things to do to improve the business. Kay kung after 5 years pa nimo buhatan og FS, after 10 years pa, dili ka kabalo whether pila ang net income nimo, whether nalugi ba ka or naka-earn ba ka og income for a particular accounting period. So dapat we need to practice periodicity or time period concept. Another one is stable monetary unit. So stable monetary unit is a transaction or transaction must be measured and recorded in term of denomination of country. So again, in the Philippines, we are using peso. So that means our financial statement should also be measured or should be recorded in Philippine peso. All the transactions will be measured and recorded in Philippine peso. Now, let's have general criteria for general acceptance of an accounting principle. So, criteria for general acceptance of an accounting principle. So, a principle has relevance. So, first, relevance is important. A principle has relevance to the extent that if the result in information that is meaningful and useful to those who need to know something about a certain organization. So, before a principle can be accepted, it should be relevant. So again, it should be relevant. It should influence someone's idea in creating decision. Another one is the principle has objectivity. Okay, second is a principle has objectivity to the extent that the resulting information is not influenced by the personal bias or judgment of those who furnish it. So that means if it's really black, it's really black. If it's white, it's really white. So no influence by personal bias or judgment should be observed. The third one is a principle of feasibility. So a principle has feasibility to the extent that it can be implemented without undue complexity or cost. So dapat i-practice nato ang principle considering benefit over cost. Dapat mas dako ang benefit nga atong madawat kaysa sa cost. So dili pwede na for the sake of practicing that concept kailangan nato mo gasto, kailangan nato mo gasto og dako pero ang benefit nato is not that big naman. So malugi ra gyapon ta. By the way, we have this GAAP, the term GAAP, GAAP considered as the accounting standards in preparing financial statement. Again, GAAP means generally accepted accounting principles. This is an accounting standard used in preparing financial statements. It's a set of guidelines and procedures that constitutes acceptable accounting practices. So basic principles. First, objectivity principle. So when we talk about objectivity principle, accounting records and statement are based on the most reliable data available so that they will be as accurate as useful as possible. So since we will be preparing financial information which will be used in making decisions, so therefore our report should also be objective, meaning it should be accurate because if the input is incorrect or erroneous, then therefore we could expect that the output is also erroneous. The decision that could be made from an erroneous information could also be erroneous or useless. So therefore, we should consider recording our business transactions accurately or with objectivity principle. Another is historical cost. When we talk about historical cost, this principle states that acquired assets should be recorded at their actual cost and not at what management thinks they are worth as at reporting date. So dili pwede magbuot ang management kung unsay gusto nila or kung pila ang gusto nila nga amount na i-record ang ilahang mga assets, particularly ang mga non-cash assets. But what will be the basis in recording them? Their historical cost, meaning the cost the moment they have acquired that assets. The third one is revenue recognition principle that states a revenue is to be recognized in the accounting period when goods are delivered or services are rendered or performed. So regardless of the cash received, bisan pag wala pa tayo nadawat nga cash, as long as we have delivered the goods already or the services have been rendered or performed already, then we can now recognize revenue. That actually follows the accrual principle. Okay, the third one, the expense recognition principle. Partner ni siya dito kay revenue recognition principle. Expense recognition principle means the expenses should be recognized in the accounting period in which goods or services are used up to produce revenue and not when the entity pays for the goods and services. So this means na bisan bag wala pa nato nabayaran ang expenses, as long as nagamit na nato siya, then therefore we will record it as expenses already. So for example, electric bill. For example, electric bill for the month of August. So, um, for the month of August, so bisan pa og wala pa nato siya nabayaran, for example, bayaran pa nato siya sa September, since nagamit naman nato siya on August, we will recognize it as expense already. Dili pasabot nga wala pa nato siya gibayaran, dili pa nato siya i-record as expense. So dili na mao ang understanding. But under expense recognition principle, as long as nagamit na nimo siya, as long as na-utilize na nimo siya, pero kahit na wala pa nimo nabayaran, then therefore it will already be recognized as and expenses. Number five is adequate disclosure. So adequate disclosure requires that all relevant information that would affect the user's understanding and assessment of the accounting entity be disclosed in the financial statements. So in the financial statements, all um, qualitative, 'di ba? Ang report lang man nato sa FS are quantitative in nature. All aspects which are considered as qualitative in nature but could affect the decision of the users of the financial statement will still be reported in the notes to financial statements. So kahit hindi siya financial in nature, kahit hindi siya quantitative in nature, as long as it can affect the decision of the business owner or the user of the financial statement, it will be reported in the notes to financial statements. Okay, let's move to the next principle. We have materiality. So materiality depends on the size and nature of item judged in the particular circumstances of its omission. So materiality is actually relative. What could be material to one might not be material to another. So example of materiality concept, let us say na ay sari-sari store, tapos na ay grocery store, na ay mall. Nawad-an og 10 ka sardinas si sari-sari store. Nawad-an pod og 10 ka sardinas ang mall. Now, which do you think ang 10 sardinas nga nawala ang material? So obviously, para kay tindahan, para kay sari-sari store, ang pagkawala sa 10 ka sardines is already material, meaning it could already affect its business operation or its business earnings already. Pero dito kay mall, bisan pag mawad-an siya og 10 ka sardinas, dili gyapon sila siya maapektuhan because ang cost sa 10 ka sardinas is not material sa iyang status as a mall. Seventh one is consistency principle. So when we talk about consistency principle, the firms should use the same accounting method from period to period to achieve comparability over time within a single enterprises. However, changes are permitted if justifiable and disclosed in the financial statement. So that means whatever accounting policy, whatever standard that is being used by the entity in recording or in preparing its financial statements, dapat in the years to come, same lang gihapon nga standard or policy ang iyang gamiton in order to facilitate comparability. Again, so those are the different principles of accounting. So, sort of recap, we have first, objectivity principle. Second, we have historical cost. Third is revenue recognition principle. Next, we have um, expense recognition principle. Fifth is adequate disclosure and materiality as well as consistency principle. So, if you have questions, clarifications with our video lecture, you may ask me on our group chat or during our virtual class. So if you would like to have more references about the discussion, you may refer to the books of Baliada and Lopez. Special thanks to the author of the Self-Instructional Manual, Professor John Veer Peter Yon, and the author of this presentation, Professor Mary Chris Lozada, CPA MSA. So that's it for the part 1 of our discussion in Introduction of Accounting. So the rest of the topics under Ulu A in your self-instructional manual will be discussed in our next video. That's it for today. See you and God bless.